Optional Loan Protection Plan. Sales training for distributors. For term loans or line of credit. Module 2. What is the Optional Loan Protection Plan for installment loans or line of credit? Loan protection and line of credit protection are optional credit insurance packages that are purchased by a customer with respect to a specific loan or line of credit. This insurance is purchased separately and could provide benefits up to the outstanding amount remaining on a borrower's loan or line of credit in the event of a claim. A customer can take steps to help protect themselves and their family in the event that they experience certain unexpected life events. With the Optional Loan Protection Plan, the loan payments and/or outstanding principal balance may be covered if the customer experiences involuntary unemployment, injury, sickness, critical illness, or loss of life. The loan protection and line of credit protection plans are underwritten by the Canadian Premier Life Insurance Company, the insurer, and all claim payments are paid to the lender or creditor to reduce or eliminate the obligations of the personal loan or line of credit agreement. Who provides the coverage? The loan protection plan is underwritten by Canadian Premier Life Insurance Company. The customer must be advised that the insurance policy is with Canadian Premier Life Insurance Company and not the lender. The loan protection plan is administered by Premium Services Group Incorporated, PSG. How much do you need to know about the insurance? Those who are involved with the sale of the insurance have to be able to fully answer questions about the insurance and give the best product description possible in order to allow the customers to make an informed decision about protecting their loan. These training courses and the distributor manual will provide you with the required knowledge. In the event that there's a question that you're not able to answer, please contact Premium Services Group. Does a customer have to buy the Optional Loan Protection Plan? No, a customer does not have to buy loan protection. The loan protection is optional and is not a requirement for obtaining a loan. Why will your customers want loan protection? The protection may be good value for a customer. When a customer receives a loan, they are required to repay the original amount, plus any interest incurred. What happens if a customer is suddenly laid off? What if they are injured in an accident? The customer is purchasing peace of mind. Not only does it help ensure the customer's loan payment or balance may be paid in the event of involuntary unemployment, injury, sickness, critical illness, or loss of life, but can also help keep the customer's credit in good standing so you can reloan or refinance again in the future. It protects the customer and the company, a win-win situation. What if a customer decides that they do not want loan protection? That is fine. The loan protection plan is optional and is not a requirement for obtaining a loan. It is recommended good practice that all customers who decline coverage must initial beside the word decline on the loan agreement where the premium amount is usually disclosed. Is the coverage cancelable? Yes, the loan protection plan can be canceled at any time. The customer has 30 days after purchasing the plan to review the coverage. If they decide to cancel during that 30 days, they will receive a full refund of any premium collected. If the customer cancels after the policy has been in force for more than 30 days, future premium payments will stop and there will be no refund of the premium that was previously paid for the coverage. How much does it cost? The loan protection plan premium, including applicable taxes, depends on the amount and term of the loan, or in the case of line of credit, depending on the balance owed. Premium must be calculated each time a customer chooses to enroll in the loan protection plan, as the premium is dependent on the details of the loan. The financing software will calculate the premium cost for each loan according to the loan term and/or amount owed on the line of credit. The premium, or premium calculation for the line of credit, is displayed on the application for the loan protection plan, and it must be disclosed to the customer separately. The premium cannot just be included in the cost of the loan. How to complete an application. The data on the application is filled in by the software. Be sure to review it for accuracy. If a customer wants to purchase the optional loan protection plan, they must read, complete, sign, and date an application. What documentation does the insured person get? Every borrower that purchases insurance must get a copy of each of the following. 1. The summary of the loan protection plan. 2. The signed application page. 3. The certificate of insurance. The certificate of insurance contains the terms, conditions, and limitations, as well as instructions outlining how to submit claims or cancel coverage. How do we present loan protection to the customer? It's important that the customer be given a clear description and disclosure of the optional coverage. Here is an example of how to start a conversation.
Great news, John. Your loan has been approved. Your payment will be X per month, which includes our optional loan protection premium of X. The optional loan protection insurance could provide monthly benefits in the case of injury or sickness, involuntary unemployment, or a lump sum payment up to the outstanding amount remaining on your loan in the event of death or critical illness. The coverage is as applicable by product.
There are a number of additional important program features to be disclosed to the customer as you go through the enrollment process. The Pocket Reference Card, shown here, highlights key features of the optional loan protection plan, which must be addressed over the course of the interaction with the customer. Explaining product value and relevance. Sometimes, when presenting the optional loan protection plan, there may be questions, as the customer may not understand all the details of the loan protection plan. Other times, the customer may not necessarily see the relevance of the product for themselves. Regardless, when dealing with the customer's questions, it's important to be able to empathize with them by acknowledging how they feel and help the customer understand that the questions they have asked may be similar to those asked by other customers. Stating, "I understand how you feel," ensures that the customer knows you are concerned and listening. Acknowledging customer concerns and letting them know others have asked similar questions to clarify helps the customer understand that they are not alone with their questions. Using phrases like, "Other customers have felt the same way," or "Let me share with you what some of our customers have found," can help customers validate their decisions. The following are some examples that will help you respond to customer questions in an effective manner by supporting open discussion. Explaining product value and relevance. This example gives the customer comfort that their questions are valid and similar to those asked by other customers, and further explains how those customers move forward with their decisions.
If the customer states, "I don't need protection. I have coverage through work," I understand how you feel. Other customers have felt the same way about the benefits their employer provides them. But they found that when they went back to work and checked their benefits program, they only had coverage for 2/3 of their income, which was not enough to cover their obligations if they were injured, and no coverage if they were laid off. If you choose to participate in the optional loan protection program today, your payment amount will be X bi-weekly, and your first payment will be due February 4th. Would you like to participate in the program?
Important to note, if, after you respond to one question from the customer, they provide additional reasons to turn down the insurance, indicating that they are unsure as to whether to enroll in the loan protection plan, you should not try to persuade them further. The customer should not feel pressured at any time to enroll in the loan protection plan. What if the customer requests more detailed information? If the customer inquires further as to what is covered, please have the summary of the loan protection plan or summary of the line of credit protection plan available to give a brief overview.
Sure, John. I have an outline of the coverage I can give you.
As appropriate, verbally or physically, provide the customer with the summary of the loan protection plan details and give them time to review and understand. For those customers who probe even further, you can direct the customer to PSG, the insurance administrator, for further clarification.
Those are great questions, John. And I know the customer service representatives at Premium Services Group will be more than happy to answer them for you.
Can the customer decline the coverage? Yes. The coverage must be made available as an option, and the customer does not have to accept the coverage in order to get a loan. It is recommended good practice that all customers who decline coverage initial beside the word decline on the loan agreement, where the premium amount is usually disclosed. How to make a claim. When a customer wants to make a claim, a claims package must be provided to the customer to complete, or to someone acting on their behalf, not to be completed by the lender, or the customer can be directed to Premium Services Group. The claimant must notify the insurer by contacting PSG, the administrator, within 30 days from the date of the involuntary unemployment, injury, sickness, critical illness, or death, and submit written proof of claim within 90 days after the loss. Otherwise, the claim may be denied. Written proof of claim must be provided to the insurer through PSG, the administrator, along with all required supporting documentation. To notify the insurer of a claim, the claimant can contact the administrator at 1-855-755-2430 or write to Premium Services Group, 495 Richmond Street, Suite 300, London, Ontario, N6A 5A9. The claims process will be outlined in more detail in Module 3, Claims. What if a customer has a complaint? In the event that a customer submits a complaint regarding PSG, Canadian Premier Life Insurance Company, or the Loan Protection Plan, you as the lender must notify PSG immediately and provide the details and contact information of the individual who submitted the complaint. PSG Complaint Policy and Procedure. Resolving customer complaints is important to PSG, and it's vital to providing exceptional customer service. In all cases, all customers will be treated fairly, sensitively, and respectfully by PSG. All referrals will be reviewed confidentially and in a timely manner. It is our belief at PSG that reporting a complaint should not be difficult. Thus, we endeavor to resolve all complaints at the first point of contact. If a complaint or concern cannot be resolved by the initial PSG representative, the process below will be followed. The complaint will be reviewed by a more senior staff member, such as a manager or senior personnel. If the complaint remains unresolved, the complaint will be further escalated to the appropriate senior management representative, where it will be reviewed. If the complaint cannot be or has not been satisfactorily resolved, the complaint will be further escalated to the ombudsperson at the insurer. Treating customers fairly. In 2018, insurance regulatory bodies released guidance on the conduct of insurance business and fair treatment of customers. The guidance discusses common expectations for how insurers and those who are authorized to distribute insurance products and services conduct insurance business to ensure the fair treatment of customers. The following guiding principles must be part of everyday practice. Treating customers fairly is a joint responsibility throughout the life cycle of the insurance product. As a lender, you have a key responsibility through your interaction and conduct with customers to build and justify public trust and confidence in the insurance product you promote. To do this, you must maintain knowledge, integrity, and competence. Knowing your insurance product and informing customers of the features and benefits is a key element to ensuring customers are making an informed decision when considering if the LPP is appropriate for them. Treating customers fairly. Guiding principles which must be a part of everyday practice. Complaints must be handled fairly and in a timely manner. Claims must also be handled fairly and in a timely manner. Lenders should provide claim forms to customers on request and refer customers to PSG for review and consideration of any claim submitted. Advice on a claim should never be provided by the lender. We must always protect the privacy of customer information. Sanctions and penalties for providing inaccurate information. In the event that you provide information to a customer other than that set out in the distributor manual, summary of the loan protection plan, or summary of the line of credit protection plan and the certificate of insurance, the following possibilities exist. Your employer could be named in a regulatory action and be subject to fines or administrative penalties. You could face the possibility of discipline, including loss of employment in serious instances. It is always our joint intention and responsibility to provide customers with information about the optional LPP so that they can make an informed decision and do what's right for them. Congratulations! You've now completed the Loan Protection Plan Module 2, Sales. You will now be presented with a quiz covering the material in this module. Once the quiz has been completed with a 100% score, please proceed to Module 3, Claims, to complete your Loan Protection Plan training.